Hey dears, this is Assistant Professor Kailesh Muralidhar Jaitwar. Welcome you all in this lecture for Financial Accounting for BCCA Sem1 students. I hope you all are watching videos to understand the framing of journal entries. If you are not doing so, please do and try to understand how to make journal entries. Otherwise, the journey for financial accounting will be very difficult for you in your future. So, with these statements, I want to start today's topic, today's practical question, which we have actually seen in previous lectures or previous lecture also. Half of the transaction we have completed in previous lectures, previous lecture, and now we are trying to cover our some transaction which is remain in this practical question in this video. But before going to the that portion, before completing that practical question, I want to introduce a new concept named as concept of combined entry. So what is combined entry? As its name indicating, the combination of entries, how we can make 2 or 3 or 4 entries in a single entry, how we can compress the numbers of entries, and how we can make one entry instead of 4 or more entries. So how we can do that in our syllabus? Let us try to understand this with a example. Let's say someone has bring cash on example on December, today's date is 12th 2020. On this date cash has been introduced by business owner, rupees 50k. Furniture rupees 10k. 10k means 10,000. He has also introduced motor vehicle to the business of rupees 1 lakh. He also bring the building. Bring building means given building to the business. Building for rupees 5 lakhs. He has also provided let's say bicycle of rupees 3,000 at the same date. This all transaction is on 12th of December. So how we can make a entry which is combined of these all transactions? In previous lectures we have seen, if somebody has introduced cash, we can make entry like cash account debit to capital account. But what if at the same date this all things also has been brought by business owner? So how we can make combined entry for this case? So if we don't want to make combined entry, we can simply make entries like this: cash account debited to capital account, furniture account debit to capital account. This one done. Another motor vehicle account debit to capital account. For this one, building account debit to capital account for building. And the last one, bicycle account debit to capital account for this one. We can make how many entries? 1, 2, 3, 4 and 5, because there are 5 things in a particular transaction. On single day, at single stroke, they are making transaction for 5 things. So how one accountant, financial accountant, can manage to combine these entries? So, sorry, door. So how we can combine these all entries? So we can find something common in these entries, and the common thing is capital account, capital account, capital account, capital account, and again capital account. So we will try to combine these all figures. So two capital account means capital account will be debited, but at what amount? Amount will be 50, 10, 1 lakh, 5 lakh, 3k. So amount will be 50k and 10k, 60,000, 1 lakh 60,000, 1 lakh 60, 1 lakh 60, 6 lakh 60, and 6 lakh 63. So here 6 lakh 63,000 will be our amount, and debiting amounts will be cash for 10k, furniture, motor vehicle, building, and bicycle with respective amounts. That is how we can make combined entry for a single transaction. This is all about how we can make combined entries in our syllabus. So how we can use this in our practical question? So this can be used in various transactions where transaction is for more than two or more than one or two three transaction at a single time. So how we can make journal entries for this? We can make journal entries for this at very basic level. We will going to try to understand. So let us start with our practical question, and in this practical question which we have half completed in previous lecture, and we will be completing in this lecture fully question. So this concept can be used in our practical question that you can see in our video, in this video only. So in previous lecture we have seen that the last transaction was selling of old typewriter, stolen. Old typewriter was stolen by someone, and we have made journal entries for the loss of old typewriter. So we are now on the 8th of December, 8th of November, I think. So on the 8th transaction is, please get your question in your district. You can get your question from description box. So please concentrate on the 8th point. So 8th point is sent MO to Radhika rupees 80 and MO commission paid rupees 2. So what is first? MO. MO is money order. So there is one person named Radhika. So we are giving Radhika 800 rupees. Okay, sent MO to Radhika for rupees 800, and we are paying commission rupees 20. Okay, so there are various things which we can see. First is Radhika. This is just working note. You can try to combine. You can try to frame journal entries by giving working notes. This is not mandatory, but for the clear understanding you can use this. So in our transaction there are 2-3 things. First one is Radhika, and the other one is we are giving money order. Money order means giving cash. So again cash. And the second part of question is commission paid. So commission will be our third aspect. So we are giving 800 rupees to Radhika. So we will write here 800, and we are paying commission rupees 20. So we can write 20. So we are giving 800 and paying commission rupees 20. So total outflow of cash is 800 plus 20, so 820. Now, how we can make journal entries for this? Journal entry for this, Radhika, again, Radhika is person. Person is personal account. Personal account says debit the receiver, credit the giver. So here Radhika is receiving money. So Radhika is receiving money. So this one is personal account and Radhika is a receiver. That's why she will be debited. Cash. Cash is again real account, very common account. Cash account will be credited. Why? Because cash is going out. And last, commission. Commission is our expense. Expense is covered under the nominal account, and golden rule for nominal account is debit all expenses and losses. So commission will be debited. So how we can write journal entry for this transaction? So we you can see that here. So this is on 8th. So Radhika account will be debited with rupees 800, and the other amount of debit is commission. So commission account debit, we are paying commission, that's why this is expense, hence we are debiting it to cash. Rupees 820. That is how you can make combined entry in this case. So you can write narration by your own. How you can write narration is being MO paid to Radhika, for which we have given commission of rupees 20. We are closing this one and shifting our focus to the second, the other entry. The other entry is 9th one. Purchased security worth rupees 2000 and paid for brokerage 60 rupees. So again, security means this is our investment. Investment means, is this expense or loss or income or gain? No. That means this is not nominal account. This is not person, that's why this is not personal account. And the only one account has remained, and that one is real account. And real account is a account for assets, and investment is my financial asset. So asset, purchasing securities. Again we will try to understand question. Purchasing securities means purchasing asset, purchasing financial asset, purchasing intangible asset. So purchased security worth rupees 2000. So securities is asset. Okay, that's why this one is real account. And the other aspect is we are purchasing something. That means we have to pay something. So cash account, and this one also real account. And the other part of the question is paid for brokerage. We are paying brokerage fees. So brokerage is my expense. Expense means nominal account. Real account, securities, we are purchasing, that means securities are coming in, that's why debit what comes in, that's why this will be debited. Cash, we are purchasing something, that means cash will flow out from our books, that's why it will be credited. Brokerage fees is our expense, and nominal account says debit all expenses, that's why it will be debited. And how we can write here? 9th, securities account debit. What amount? Rupees 2000. And the another one is debit. The other debit amount is brokerage. So brokerage expense account debit rupees 60 to cash account rupees plus of this 2060. This is how you can make entry. This is very easy concept. You have to focus your you have to put your focus on these types of journal entries, because this might be difficult for you if you are not giving your concentration, because this is somewhat advanced entries, and in previous lecture we have seen very simple entries, and this is all about combined entries. You have to give focus, and you have to read question properly to connect these types of aspects. Okay, so the next transaction is paid for monthly's club bill. Paid for monthly's club bill. So monthly's club bill, is this expense for us? Is this a expense for business? No. This contribution is made by our Bhola. Bhola means our business owner. This is the amount which has been drawn by Bhola to give this amount to someone, which is this person is a monthly, and this is not the benefit of business. This is not for the benefit of business. That's why this is not the transaction for business, and hence this is not the transaction of business. This is the transaction of Bhola. That means this is personal expense of Bhola, and personal expense of Bhola means here we will not consider account of monthly. So monthly account will not be credited or debited here. So what can be done then? So we have cash, and Bhola is receiving. So Bhola's account. But as we have seen, we cannot record our transaction on the name of business owner. So we don't use this name because of accounting guidelines. We have to use capital account instead of this account. Okay, and this capital account is only used when business owner brings something for business, and if business owner is taking from business, then we will be using name drawing account. Okay, so instead of these and these, instead of this and this, we have to use here drawing account. Why? Because Bhola is drawing something to give particular monthly. Okay, so here we will be having again two aspects as we have discussed. First one is drawing account, and the another one will be cash. So cash is real account, cash is going out, that's why it will be credited. And Bhola, this account is nothing but Bhola's account. So Bhola is a receiver here, personal account, and debit the receiver, credit the giver. The golden rule of personal account. This one is a receiver, that's why Bhola's account. That means drawing account will be debited. Understood? So entry will be drawings account debit to cash account, and the amount is 600. Okay, coming to the 11th entry, gave charity. we have given charity to someone, that means this is not the business expense, but this has been provided by Bhola from the business account. That's why here the new expense come into the business, and that expense name is charity expense. This is also one of the expense for us. This will not be in the regular cases, but we are considering here because this one is given in our question. So first, charity expense, and we are paying cash. So the another aspect will be cash. So charity expense means nominal account, and debit all expenses and losses, the golden rule of nominal account. So that's why this will be debited. And cash, we are giving cash, that means cash is going out. Real account, cash is going out, that means debit what comes in, credit what goes out. So 11th entry will be charity expense account, debit to cash, it will be rupees 300. Then next entry, sold private scooter and invested in business. Someone means Bhola is selling his scooter and giving his amount which he has gotten from selling of scooter. So Bhola has sold and investing in business. That means Bhola will introduce rupees 2000 into the business. That means this one is capital. And what will be the entry? Cash is coming in. That's why cash will be debited. And exact in this first entry which we have seen is cash account debited to capital account. That same logic will be applied here only, and the 12th entry will be cash account debited to capital account, and amount will be rupees 2000. Okay, easy. Now we are on the 12th. We have completed 12th entry, and again we have 6 more. Let's conclude that very easily. 14th entry is bought equity shares of Bharat Fertilizers. So equity share of Bharat Fertilizers. So what is equity share of Bharat Fertilizers? That all are investment for us. We are investing in equity share of someone. Investment means again Bharat Fertilizers equity share. This is investment real account, we are purchasing this, that means something is coming in. This is real account and investment is coming in, so debit what comes in, so this will be debited. And the another one, cash will be going out, so cash is going out, so cash account will be credited. So our entry for 14th day entry will be Bharat Fertilizers equity shares account debit to cash account, and amount will be 900. We are closing this. 15th entry, received from Sita 100 rupee note and gave her change for it. Someone has arrived and saying that take this 100 rupee take this note of 2000 rupees, and please give me changes. Please give me changes of 100 rupees. So this is not the transaction. This is mere exchange of currency, and this is not the transaction. That's why for 15th there will be no entry. For 15th there will be no entry because this is not the transaction. 16, again invested in national small savings certificate. Again exact like this, same logic will be applied here also. National small saving certificate. This is investment for me, and investment real account, and investment is coming in, that's why it will be credited, because debit what comes in, real accounts rule says, and we will be giving cash, that means cash will be credited. So for 16th, national small savings certificate account debit to cash account, and amount will be 100 rupees. 100 and 100. Done. We are on the second last entry. No, this is third last. Okay, paid rupees 200 for carriage on machinery. Okay, this is another one, the important entry. We are paying for machinery, and this is the concept where carriage or repairs and maintenance made for machinery will be counted as machinery. So we will be considering account of machinery here. Or paying cash means cash. Two aspect, machinery is real account. Machinery is not actually coming in, but we are paying cash for machinery. That's why it will be debited and cash will be credited because cash is going out. So machinery account will be debited to cash account. Amount will be 200. Okay, now we are on the second last entry. Till taking means cash sales. So we have sold goods for rupees 500 on cash basis. So cash, again two aspects, cash and sales. So cash, we are selling something, that means cash will be coming in. So cash will be debited, and sale is my income, that's why it will be credited. So cash account debit to sales account. Nominal account, rules applied here. Rupees 500. Last entry is paid income tax. Income tax is my expense, that's why income tax account will be debited. Income tax account debit to cash, and amount is rupees 200. That is how we have completed all the transaction of this practical question. Next practical question will be taken in next lecture, and your notes will be ready very soon. So be ready for your assignments. Thank you.